Are you ready for the upcoming wave of tokenization? Your stocks, your bank account, your home, your diplomas, all stored on the blockchain, and all these transactions happen on the blockchain? Well, that's coming. But how can you personally take advantage of it in your personal investment portfolio? You're going to find out today. We're going to talk about the upcoming mainstream adoption of stablecoins and real-world assets in your personal portfolio. I'm sure you probably heard of stablecoins. And stablecoins is purely just a representation of fiat on the blockchain. The two biggest ones are obviously USDC and USDT, and these are fiat-backed stablecoins. And what I mean by fiat-backed is usually they are backed by actual dollar reserves, meaning that for every dollar that's on the blockchain, there should be an actual USD dollar that backs it. So you can always be able to exchange one USDC or one USDT for a dollar. This is how the peg is maintained on the blockchain. From a market standpoint, 99% of all trading and volume is on USD stablecoins. Although there are much smaller ones, the USD stablecoins still dominate. Most are fiat-backed stablecoins, as I mentioned before. Due to legislation and the crash of certain tokens like Luna, non-fiat-backed stablecoins or algorithmic stablecoins are not as popular anymore. There are obvious advantages to having USD stablecoins. I think the biggest, or one of the biggest, is cross-border flows. So you can imagine just international banking and how that works. If you're managing business, or if you have employees, or if you're just paying or sending funds across to different countries, oftentimes the system that is used is called SWIFT. And typically these transactions, like using SWIFT, take 3 to 5 business days. It could cost anywhere from $25 to $50. And that's both parties. The incoming party paying $50 who receiving the funds, and also the outgoing party paying, $25 or to $50 as well. That is an obvious fix for blockchain. If you think about some of the L2s that we have, such as Base of Arbitrum for Ethereum, or Solana as another L1, you can literally send those funds. They arrive in 3 to 5 seconds instead of 3 to 5 business days, and they cost half a penny instead of $40. The blockchain will definitely replace these. Also, legislation is pushing for stablecoin adoption. The Genius Act has passed in the US, and there's also other additional measures now coming out from the government where stablecoin transactions that's less than a certain dollar amount can't be taxable. So all of this is pushing to more stablecoins being used in the private and public sector. Next, we're going to talk about real world assets. If you think about bonds, stocks, real estate, your credentials, all of these can and will eventually come to the blockchain in one way or another. I think one big thing that's about to happen in the future is going to be tokenized stock trading. So instead of trading your Apple stock or Walmart stock on an exchange, you'll be able to trade that on the blockchain. If you think about real estate, maybe the property and the title and other details of real estate transactions, including the amount, are all stored permanently on the blockchain. Next, you even have like your diplomas or your degree, maybe your credentials, your high school diploma, your college degree, or your master's or your PhD, all lives on the blockchain and can be easily verified through the blockchain by potential employers. Some of these operations going to the blockchains will boost efficiency, but other ones will boost actually security. If you think about like property rights, for example, who owns a certain plot of land? There are some places where corruption can mean losing your land. But if property rights are properly recorded on the blockchain and the blockchain can't be changed, that's something that potentially could hold up in the court of law. To bring it back to stablecoins, I do want to touch on different investments that are possible in stablecoins right now. One of the main ones people frequently talk about is Circle. And I think one of the big things you should understand about stablecoins is that there's very little barrier to entry. One recent example just happened was on December 18th. SoFi, one of the biggest online lenders in the US, but also offers services like savings and investing, announced it's launching its own USD stablecoin called the SoFi USD, which is a fully reserved stablecoin similar to like the USDC. And key word or key note is going to be launched on Ethereum. And we'll get back to more on that. There are also other companies such as Bank of America, Wells Fargo, Amazon, who are either studying stablecoins or even preparing their own launches. So one key risk, if you're looking at Circle or you're very bullish on Circle, is that they are going to have more competition in the future over the USD fiat stablecoin market. The key thing to note about stablecoins is that although some of the bigger companies like SoFi may actually launch their own stablecoin, you won't see many companies trying to launch their own L1 blockchain. Like L1 blockchain, you won't see many companies trying to launch their own Ethereum or their own Solana. It takes a huge amount of effort, a lot of years to gain trust, and frankly, it may not just be worth it when there's already good solutions out there such as Ethereum or Solana to actually base your project in. With stablecoins, let's look at some data. Looking at the Artemis site, you can see that there was 1.5 billion stablecoin transactions in the last month, or around, maybe 50 million per day. Some of the biggest, as you can see, was the BNB chain at 230 million, Solana at 182 million, and then if you combine Ethereum with all of its L2s like Polygon, Base, Arbitron, and Optimism, you see that there was over 300 million just for Ethereum and its L2s. So we can see that the adoption is big, and there's already millions or billions of transactions that's happening concerning just stablecoin, and people using either USDT or USDC or another fiat-backed stablecoin. From a world asset perspective, we can also see a growing adoption that's on the blockchain. And you can see what I have from the RWA site. So just to give you an example of how we're just at the beginning of this adoption of real world assets, you can see that there's $8.5 billion worth in US Treasury debt. But the market size of marketable Treasury debt today is around 29 trillion. So this amount is literally only 0.03%. It's actually on the blockchain. Another example is public equities. You can see that there's 700 million in public equity on the blockchain. But the US equity market alone is estimated to be around 60 trillion plus, while the global equity markets are essentially double in size. What's important about these is the transaction volume. And I know we've talked a lot more about transaction volume being a driver of actual value for blockchains like Ethereum and Solana. And one of the biggest reasons why that's important is because for Ethereum or Solana, for example, the size of the asset that's being transacted does not affect the transaction cost, which means it does not affect the Ethereum or Solana token that's needed for gas or as a transaction fee, whether the item is worth $10 or whether the item is worth $100 million. So the amount of transactions is what you need to focus on, because that is what's really going to drive demand for the utility token of blockchains or L1s like Ethereum and Solana. So you can imagine, I just mentioned before that Ethereum and its L2s recently had over 300 million transactions in the past month, or around 10 million per day. Imagine if the 30 million plus transactions that happen on Uber per day came to the blockchain. Or imagine that 12 million plus Amazon transactions per day came to the blockchain. You could easily see the amount of transactions just for, let's say, Ethereum and its L2s going up by 10x or even more from where it is now, which is technically, 10 million a day. So you could easily see the amount of transaction volume on Ethereum and its L2s going up 10x or more per day. And I want to direct you to an article I wrote about this, the link between Ethereum's value and the transaction volume below. So to get back to the main point of what's the angle, is that there's a coming tokenization wave, and the main thing you should focus on is transaction volume, because that is what's going to drive the value of the utility tokens of blockchains like Ethereum or Solana up. So what's the angle for the upcoming tokenization that's going mainstream? The one thing you want to focus on for your personal portfolio is transaction volume, and which L1 blockchain is going to be benefiting from the huge jump in transaction volume. Right now, I believe Ethereum and its L2s will be one of the biggest beneficiaries of this. They're already in the lead, and they also have very, very strong network effect, buy-in from corporate institutions such as SoFi USD, and advantages such as companies like Coinbase actually running the L2 base that links in with Ethereum. And that's what's the angle on tokenization and stablecoin transactions, the coming adoption, and what you need to do in your personal portfolio to benefit. Till next time.